Hey everyone, Nick looking at, well, right now we're looking at Apple. But today's video is looking at the Qs going into next week. Today is, the hell is today? 4/17. So next week is very important. It starts with Netflix. I'm starting with the Apple chart because today Goldman Sachs came out with a sell rating on Apple. So they rarely go out with like buy or sell, so this is important to pay attention to, not because they're smarter than me. I never listen to them, just because to see what the insiders know. By insiders I mean the Wall Street people, if they know anything. Usually I listen to them when they make a call going into an earnings season. So they might have some inside information that we don't because they golf with their buddies or whatever. I don't know. I still trust the charts. But it's interesting to see. I'm going to make a comment starting with Apple, but really the focal point is the Nasdaq. The endpoint is the Nasdaq. The focal point is Netflix and its infectious effect next week. It's the first of the FANG to report. It's the first of the mega cap tech to report. And usually it sets an example. Like I remember a couple of years ago when it reported and spiked like 18%, and then Google spiked 15, 12%, Facebook spiked, everybody spiked. But then the opposite happens too. So it has an infectious effect on everything. Except I do have a few thoughts this time. So first I'll start by saying the reaction over the earnings is always a guessing game at the open. Always. I don't care how smart you think you are. We don't know what the P&L is going to say. In fact, if I give you the P&L, you could not guess better than a coin flip on how the market will react. Even if I give you the P&L the day before and say, tell me how it's going to open the next day, I bet you get it wrong half the time. So, because we don't know what he'll expect. It's emotional. The long term, you could guess right. Like if they dip and you were wrong for a little bit and then they recover, you say, I was right. Yes. But the open, so if somebody's taking a trade for the earnings, it's guessing. Okay, so that's my point. So Apple is down on a big up day. I mean, the market was like flying and Apple was down because they downgraded to sell. Don't care about their opinion, but the point where it is right now is important. This is an important level that it just took it out, but it took it out in a fantastic fashion. Last night it spiked to 296. So up here. And failed. That was bogus, but it literally went off my chart. I had a chart open and it just went up. I couldn't see the candle. So something's up. But this level is important. What is this level? 280 is important. Look at the cluster around 280 I had back here. I didn't delete them for a reason. We had a big fight over here. So this area, 280 to 273, is important. So theoretically speaking, a dip into it is a buyable opportunity, but we have earnings, okay? So let me circle back on the fact that Apple's important here. They downgraded to sell because of whatever, G5, 5G or whatever. So the important part is Netflix. Next week reports. So Netflix has had a great move. We saw it coming. We had a breakout in Netflix. We charted it. I said it's going to 430 as soon as it broke out of here. It went to 430. It overshot a little bit. Now, longer term, you could argue that this is going to 480, 490, but I'm not going there. This was a nice top. So the thing was to short it here like I short Roku yesterday, but I didn't have the balls to do Netflix as well. I chose Roku because it's got crappier fundamentals. So the idea was to not chase. The chase was here. Even if you missed a few bucks, I knew that it was 430 to target, and I gave you the target, and then you could have chased it. On the way down, so now is it shortable? I don't know. The earnings are going to come out. I assume, well, everybody's at home. I watched Netflix for the first time ever, free. Somebody shared their, for me to check it out. So I still haven't subscribed, but they should have given me a free subscription for a month. I probably would not have canceled it after that because they have good stuff. So that's the point. I don't know if they played their ace. They had an ace. Everybody was watching Netflix, and they didn't give it to everybody else that doesn't watch Netflix free. I don't know. Maybe they can't. But besides the point, I wouldn't short it because they're probably going to print good numbers. However, how much of those good numbers were expected up here? Again, see, I'm gaming myself up or down. I don't know. I think onus is on the bulls to take it out from here. That's my opinion. They need to say something like, we signed up 3 billion people. Whatever the expectations of sign up, if it's 2 million and they sign up 4 million, the stock will rocket. So how can I play it? So FANG usually moves with Netflix in sympathy. So out of the FANGs, I like Microsoft first, Facebook second, Google last. Why? Because Microsoft has cloud. Reason Amazon is rallying, not just because of shopping, because of its cloud. If everybody moved online, Zoom and all of these guys probably use Microsoft. They use Amazon infrastructure because they own the cloud. Microsoft is making a run into the cloud, so it probably has the same effect. Now, Google has kind of the thing, I think, the same thing, but Google and Facebook are losing advertising money. Everybody that advertises electronically pulled back. Even Barry Diller, who owns the internet basically at one point. Interactive, the company Interactive, and they, like Match.com and all these companies, Expedia, so they pulled back on advertising. So that hurts Google. Whatever effect they have from the infrastructure as far as the web, they're probably going to lose on ads. So Microsoft, nobody's going to cancel their Microsoft Office. In fact, people may have signed up for new Office 365 so they can share their files among their companies. So Microsoft has upside potential. So let me look at the stock of Microsoft to see how far up the chain. So it's not cheap. Again, it broke out. I drew this box in earlier videos, I think. And look, I mean, this was my target that I drew down here. I couldn't have drawn it more perfectly to where it hit it. So clearly this is not a starting point. But if I were to bet on a earnings reaction, I'd say up. Okay. Having said all of that, this is all-time high. How can I make a conviction buy with an all-time high up here with the economy in such terrible shape? I just can't. So I cannot say, let's load up on Microsoft long. I would make a bet. So how would I make a bet? So this point here is the trading idea. I would use small money, lottery ticket style, with better odds than a real lottery ticket. How would I do that? I would buy a call spread. I wouldn't buy calls. The VIX is too high. Buying calls is too expensive. Yeah, profits are big, but if I had conviction, if it was here, I'd buy calls. Up here, I can't. So I would have to buy call spread. So I can make a vertical spread, a diagonal spread, or a calendar spread. And if it's a vertical spread, I go out in time, at least to May, because it costs the same. I want to buy it close for a chance to double my money or nothing. So versus me buying it up here and it moves and it doesn't reach me and I lose money anyway, so I have to guess direction and size. That's my opinion. So small money for a chance to make big money, either close to the money or way up there and make it a really lottery ticket cheap, 50 cents to make $4 or something like that. That would be one way. So what if Amazon, what if Microsoft, what if I'm wrong? What if Microsoft disappoints and the other guys rally? So here's the even safer bet. I would do a Qs. So this is the Nasdaq ETF. The NDX is the index. The QQQ is the ETF. So it's 10 times cheaper here. It's easier to trade. They have 50-cent spreads, dollar spreads every week. It's really liquid. So it really ran recently. This is all-time high. I mean, that's just insane. So let me double check that. Yeah. So I'm not crazy. So I want to bring out, I don't know why I drew this back then, but I'm usually not crazy about drawing about my levels, so I'm going to extend it. All right. So I think they'll have a problem here, 220. So if I didn't know about earnings, I would short it. But if I want to bet up on any of these stocks I just mentioned, why not use the QQQ? Because here's why. If I buy Amazon Netflix calls for next week and Netflix goes down, I lose my money right away. And then if I bet on Netflix by buying Facebook, my calls would not die right away. They would die a little bit, but Facebook hasn't reported, so the calls will still have the implied volatility and the VIX in them, so they would hold better. If I do the Qs, that's true for all of them. This way I'm playing all of their earnings one after the other and I don't die immediately. So if I wanted to bet on Netflix, I would probably use Facebook or Microsoft, even Disney, because of the streaming thing. If I wanted to bet on all of them together, I would use the QQQ. As far as me guessing, gut says higher, but logic says they should fall. Okay, so gut says higher, at least for Microsoft, and logic says they should fall. So how would I short them? We know how to game them up. Same thing here, call spreads. To short them, somebody that wants to take the other side, they would buy a put spread. So where would I buy it? I would probably target this little open gap here. It's a level that makes sense. So some people like to sell spreads, so I would sell it above this level, but look at this open gap up here. So I'm not sure that we can fill this gap now, but here's okay, so earnings aside, normal price action should be like this. A fade, a reload, maybe fill this gap even, don't care. The reload, and then they come back and they take it out. This would be a better performance. This would be an inverse head and shoulders, and then they take it out, they test it for footing, and then they can build upon that from here, okay, with little dips and whatever. And then the target would be this much upside eventually. So the target would be new all-time highs. What, you freaking moron? Hey, I'm just reading the chart. I'm just saying, if this happens and they break it out, new all-time highs are more likely than not. That's my opinion. But what do I know? So the bets. So the point of the video today is to see which one I want to play. I gave you my opinion as to which one and why, and what is the cheap way of doing it, because it's really guessing. You don't know. I don't know. Nobody knows. The CEO of the company doesn't know. If he or she says the stock market will buy my stock tomorrow, they plan on lying and saying something that is during the call to make it go up their way, but they cannot tell. Okay, so as far as fade point, this will be a point to fade. So I would put a note to myself here to fade this. Oops, because this would be a hard point to pass, in my opinion. This zone, this box, I drew it for a reason, but I'm going to draw another line on it here. All right, so Nick signing out. I just wanted to share this stuff. If you haven't been already, reach out to in the description. There's a link. Hit it. There's good stuff going on all day.